Hello everyone, and welcome back to the channel where we demystify the exciting world of how to borrow stocks and potential short squeezes. Today, we're diving deep into a fascinating ticker that's been lighting up our screeners, DSY, also known as Big Tree Cloud Holdings Limited. We'll break down exactly why this stock is attracting attention from short sellers and what that could mean. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo/info card. Big Tree Cloud Holdings Limited, ticker DSY, operates in the consumer defensive sector, specifically household and personal products. They manufacture and sell personal care items like sanitary napkins, panty liners, and sanitary pants under brand names like Big Tree Cloud and Yaliota. With a current market capitalization of just $21.08 million, DSY is firmly in the micro-cap category. While today has seen a slight dip of minus 2.75%, the stock has been a significant mover recently, soaring over plus 71.27% in the last 5 days and an incredible plus 125.0% over the past month. What is cost to borrow and why it matters? So, why are we talking about DSY today? It all comes down to something called the cost to borrow, or CTB. When a short seller wants to bet against a stock, they first have to borrow shares. The cost they pay to borrow those shares is the CTB fee. Think of it like renting a car. The more in demand the car, the higher the rental fee. When a stock is hard to borrow, it means there's very little supply of shares available for shorting and high demand from short sellers. This drives the CTB fee sky high. These fees are typically annualized, so even if it sounds astronomical, like 775.2%, it's the yearly rate. However, a dramatically high CTB signals intense short interest and limited shares. Why this stock is hard to borrow right now? Show CTB chart. DSY has appeared on our hard to borrow screener with an astonishing annualized cost to borrow fee of 775.2%. What's more, this isn't just a static high number. The CTB has actually seen significant momentum, increasing by 13 percentage points over just the last 5 trading days. This indicates an intensifying scarcity of shares for shorting. Our data shows there are only about 45,000 shares currently available to borrow, against an estimated float of 1.3 million shares. This extremely low number of available shares, combined with the soaring CTB, contributed to DSY getting a composite squeeze score of 47.5 on our internal 0-100 scale, which factors in multiple variables. Squeeze mechanics explained. Animation of shorts covering. So, what does it mean when a stock like Big Tree Cloud Holdings Limited becomes hard to borrow with such a high CTB? It means short sellers who bet against DSY are paying a hefty price to maintain their positions. If the stock price continues to rise, or if the number of available shares to borrow shrinks even further, these short sellers might face increasing pressure. They could be forced to buy back the shares they borrowed to close their positions. This is called covering. When many short sellers are forced to cover simultaneously, it creates a cascade of buying pressure, potentially driving the stock price up even more rapidly. This phenomenon is what we call a short squeeze. It's a battle between those betting against the stock and those betting for it. Dilution risk check. Before getting too excited about squeeze potential, it's crucial to check for dilution risk. Dilution is when a company issues new shares, increasing the total number of shares outstanding. This can often depress the stock price and, critically, can provide new shares for short sellers to borrow, effectively negating a squeeze thesis. In the case of DSY, we performed a thorough check for recent dilutive SEC filings like S-1s, S-3s, or 424BS over the last 90 days, and found no such filings. This means, at least for now, there are no immediate signs of significant new share issuance that could undermine a short squeeze purely from a dilution standpoint. We also didn't find any recent reverse splits in our look-back window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show live chart. While the high cost to borrow for DSY is certainly a red flag for short sellers, it's vital to remember that a high CTB does not guarantee a short squeeze. It can also indicate that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to stay short. What should you watch for? Keep an eye on the borrow desk data. If those 45,000 available shares to borrow shrink further, it increases pressure. Also, monitor volume. DSY today's volume was 100,700 shares, significantly lower than its 30-day average volume of 5,784,790 shares. This translates to a relative volume of 0x average, meaning current interest is far below its recent surge levels. A sudden increase in volume, especially on green days, could signal renewed buying interest and potential squeeze action. Big Tree Cloud Holdings Limited (DSY) presents a fascinating case with its extremely high cost to borrow and low available shares. It's a prime example of a stock on our hard-to-borrow screener that warrants close attention for its unique market dynamics. But always remember, the market is unpredictable, and thorough research is your best defense. If you found this breakdown of DSY insightful, please hit that like button, subscribe for more deep dives into hard-to-borrow stocks, and let us know in the comments what other tickers you'd like us to analyze next. Thanks for watching, and happy researching.